Hello, and thank you for taking the time to watch another brief video. Today, I want to talk about something that I've been studying and following for probably the last 20 or so years. It's dealing with gold, gold's price, and certain indicators that many in my industry try to follow and track that might tell us when gold and its price, priced in dollars, is going up or down. And, you know, so I'll admit, I have been a gold fan for probably 15 years or so, maybe even 20 years. I'd say in between the two. And for many, many years, I held true to the philosophy that gold was tied to our monetary base or the amount of money that's in our system, which can be viewed by many different metrics in our society and in finance. However, I don't feel like that's exactly the case anymore. I've also looked at gold relative to our debt and tried to draw conclusions there. And, although there are some times when these prices do closely align, I think there are just as many times when the prices don't align, and it would tell us just a different story. So I'm not saying in this video that I have all the answers, but I want to show you some things that most people look at for the price of gold and just give you my assessment as to whether or not those are accurate and they work. And, they all can work because really what predicting price levels is in the United States dollar terms is, in my opinion, a collection of data points that we compile together to make the most educated decision that we can make. So I'm not going to sit here and say that I have a formula that tells us exactly where gold's price is going, but what I would say is that I think we can use today's session and information to say that we can't rely on one resource to tell us where gold's price is going. Okay, so let's get into this. I'm bringing onto the screen here a chart that shows the money supply represented by M2 and the price of gold. So what I want to focus on here is going clear back to the late 70s when there was a first major disconnect. It's going to be right here between gold's price, which is reflected in gold or yellow here on the screen, and the money supply, which is going to be depicted here in green. So if you can see, the money supply had a slow and steady increase through the 70s, 80s, 90s. And then when we get into the 2000, that started to escalate a little bit higher. But my point would be to start is back in the early 80s, late 70s, there was a major disconnect right here between the price of gold and the money supply. So that would be the first time where I would say that, no, I can't really sit here and say that the money supply and the price of gold are going to be a great indicator forever. Obviously, we can come back here or come forward here to late 90s when the price of gold was on the opposite end of the spectrum as to what it was in the late 70s. So you look at this time period from early 2000s or late 90s all the way through, 2006, 2007. And there was major disconnects between the monetary supply and the price of gold. So we have one in the late 70s, one in the early 2000s, late 90s. Then after the Great Recession, which was right here in 2008, we had another disconnect where gold overshot again to the upside, proving that there is no correlation, or I shouldn't say no, there is a limitation on the correlation between these two values. Obviously, here in the 2009, 2010 timeframe, maybe 2011 and 12 also, there was major disconnects between the monetary base and the price of gold. Then again, we resorted back down to way underneath. And we have resided there for many, 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 many years here throughout the mid 2000 teens and into the early 2020s. And then here again in the early, I guess I should say the mid part of the 2020s, we are again experiencing a time period where we are way above the green line here, which obviously I've said multiple times is signified by the monetary base, or M2, money supply. So really, this chart proves that there's somewhat possibly of a directional correlation. Like obviously this whole time period, gold and the monetary base are moving up. But I think more than anything, this chart proves that there is not a good correlation. This obviously is a major disconnect. This is a long time. I mean, if this was a year, 2 years, okay. But this isn't a year or 2 years. This isn't a year or 2 years. This kind of is. This isn't a year or 2 years. These are long segments of the time periods that we're talking about where gold is way off the price of the monetary base. Okay, so let's move on to the second one. This one is the Fed's balance sheet versus the price of gold. Okay, so many people would say when the Fed does QE, when the Fed increases the size of their balance sheet, this has a direct and specific effect on the price of gold. And I think if we look here, going back to, we can go back right before the Great Recession, and we can see here for many years, the Fed's balance sheet was static and never moved. And as you saw on the last chart, gold price moved, right? So we'll just go back to that real quick. The gold price was moving up and down and all over the place all this time. And on this chart here, the Fed's balance sheet, as noted here, was static and never moved before this time period of QE1 in 2008. So gold was going up, Fed's balance sheet was staying the same. Obviously here, gold's price is moving up, the Fed's balance sheet staying the same. And obviously here during the recession, we did start to see some sort of a correlation. But then we get to 2013, and again, there's a big disconnect. We have a time period here where the Fed's balance sheet moved a lot. Gold didn't. Okay, gold just kind of stayed the course. Again, here, Fed's balance sheet moved a lot. Gold didn't move at all. This is COVID, this gray bar right here. And, the Fed vastly increased their balance sheet during that time period, or bank reserves during that time period. And gold price stayed the same. So again, I think this chart shows and proves the same thing. I don't think you can draw a specific conclusion from this chart that says that gold's price is directly affected by the Fed's balance sheet. Okay, let's go on to a third chart here. This is kind of a ratio. So this is the chart we looked at first, which is M2, or the monetary, the amount of money that's in our system, the U.S. Monetary system, and gold price, and they turn it into a ratio. So they divide the two, and you can see here, this is all over the place, right? It's if we call this the starting point, at least it is on this chart. We were up higher, we were down way lower, we were up, we were down, we were up, we were down, right? So this just looks mostly at that relationship or that correlation to see if there is any theme here. And I think we can prove by this chart that, again, there's no theme here. There's not any direct correlation that we can draw from this that tells us exactly where gold prices are moving in the future. Okay, and then what do we have here? This is the last one we'll look at today. It's gold's price and total debt. Okay, so this happens to be total public debt, but let's just call it total debt. So obviously you can see here for the start of this chart, we had gold price rising back in, again, the late 70s, and we had total public debt not moving much at all, right? They started to kind of see a time period here throughout the middle of this chart where maybe you could see some correlation if you really looked and tried, but not really. And you can see here right after the recession in 2008, 2009, that gold's price started to increase, leaving the total public debt here in the dust. And that's what it's done here recently. Obviously, there were time periods where it did appear to be moving in tandem, but I would say this is another chart that is there some congruencies that we might be able to draw from here to make educated gold oriented pricing decisions? Well, sure, right? I mean, there's a ton of different things you can look at to kind of forecast what the price of gold might be in the future. But again, I don't think there is a direct correlation to the monetary supply, to debt, or really to any of these other metrics that gold bugs like to tell us that there are. And I'm not ripping on gold bugs because I am a gold bug myself, but I just don't think there's one magic pill that's going to give us gold's directional price in US dollars. The value of the dollar is another chart that I could have put up here. Most people would say that as the dollar goes up or down, gold moves accordingly. I don't think that relationship is as strong as it's thought to be either. Gold's price has soared over the course of the last 6 months, and the value of the dollar has pretty much stayed level. The value of the dollar has been in the same trading range between 90 and 110 on the DXY for about the last 5 years. Now, has it fluctuated? Yes, of course. But has gold's price fluctuated here in the near term? Oh, yeah, big time, right? Gold's price has soared. Has the value of the dollar fallen off a cliff? No, it hasn't. In fact, here recently in the last couple weeks, it's actually been rising as the price of gold has kind of stayed somewhat high, static. So I just do not think that any of these are a one chart size fits all solution to telling us the price of gold. I think what we need to do is what is just bring together a lot of different charts, all the data that we can, and make an educated decision on where we think the price of gold is headed based upon many, many different factors. I don't think this is something that we're going to get easy street and be able to tell exactly where gold's price is going just because we have a magic chart that we think is great. Anyways, hopefully this was helpful. Talk to you soon.